Accounting is the language of business. When a business is set up, established or constituted, the idea is to carry out an activity, a core activity, and earn profits out of it. Now, even if it is a non-profit organization, a charitable organization, there are incomes, expenses, assets, etc. generating a revenue for that particular activity to carry on. Business, as the term indicates, is the state of keeping oneself busy, busyness. So it is the engagement of a person or any entity in a particular breadwinning activity which generates a profit. The term profit is nothing but the difference between or the excess of income over the expenditure. So whether it is a business for a commercial profit-making business, or it is a non-profit organization like a trust, for example, which is set up to execute a social welfare project, that being the core activity, to achieve the core activity, this business or charitable entity enters into transactions. A transaction is where everything begins in accounting or accountancy, also called accountancy. So it is the vehicle, it is the language, it is the expression of a business. To understand accountancy or accounting, there are certain technical phrases we need to understand, which we will be coming to shortly. One of them, or the most principal of them, is business. So a business deals with an activity or results in an activity involving in a number of transactions over a period of time, incurring expenditure, earning incomes, at the end of which period, the accounting period, we strike a balance between the incomes and expenses and decide whether that business or the activity or the organization or the entity has earned a profit or has incurred a loss. So business is essentially a set of activities resulting in a set of transactions, finally resulting in a profit or a loss. A business might involve any line of activity. It could be pharma, manufacturing, software, entertainment, service. All these are different lines of business activities. And a business may be constituted in different forms, like a sole proprietary, an individual carrying out a business, or a partnership firm, or a family, a cooperative society, or a company. So now we are coming up to two different things: forms of business and types of business. We need to link them. So if I make a distinction, let's list out a set of examples for each. The type of business could be manufacturing, it could be service, it could be software, exports or trading, etc. Or if it is a form of business, sole proprietary concern, a partnership firm, a cooperative, society or a corporate or a company form of business. So these are the forms of business. These are the types of business they could engage in. And these are examples. There could be many more. Now, various permutations and combinations arise. A sole proprietary may carry on manufacturing business, service sector, a sole proprietary into software, a sole proprietary into exports, a sole proprietary into pharmaceuticals. So various permutations and combinations arise. A partnership firm into manufacturing, partnership firm into airline business, partnership firm into hotel business. So get the distinction between the forms of business and the types of business they could engage in. And when I say business here, business is a general term to cover trade, profession, industry, vocation. Business is a macroeconomic term. It's a larger term comprising all these under it. Trading or trade is nothing but buying and selling goods with the intention of making profits. When trade is carried on a larger scale, it is called commerce. Industry is a particular market, the software industry, pharmaceutical industry, tire industry, hotel industry. So industry is a particular type of business under which there are firms carrying out that business. So business, trade, vocation, profession, all of them I am taking in the same breath. For the purpose of learning accounting or accountancy, what is common to all of them is the language they talk, which is accountancy or accounting. So now you can have various permutations and combinations of different forms of business engaged in different types of business. So a business, be it pharmaceutical, be it a hotel industry, be it a software industry, a transport sector, airline sector, whatever it is, all of them have incomes, they have expenditure. Strictly speaking, there is no difference between expenditure and expense. So all of them have an income, their revenue, different sources of revenue, and different avenues in which the expenditure goes out. So this continues to move like a cycle, and therefore we need to decide the result of a particular period with respect to income and expenditure and decide whether you have derived a profit or incurred a loss. That period is an accounting period, generally followed, even for statutory purposes, as a financial year. We know various types of years: the calendar year, a January-December year, academic year, a June-May year. The Reserve Bank of India follows the July-June year, financial year. A financial year is a typical yardstick for accounting, resulting in a profit or a loss determined as per the books maintained by the business to decide various aspects. For example, that is the basis on which it pays its income tax for the year. So the yardstick or the measuring rod is a period of 12 months called the financial year, commencing on the April 1st of a particular year and ending with the succeeding 31st March. For example, the financial year 2020-2021 begins on the first day of April 2020 and ends with the 31st day of March 2021. So at the close of business, EOD, end of day, of 31st March 2021, we compile all the financial information, however long it takes, and decide whether the financial year 2021, that is 2020-2021, has resulted in a profit or a loss for the business. And that is based on all the transactions of purchases, sales, incomes, expenditure, investments, etc. made during that period. So whatever be the form of business, whatever be the type of business it is engaged in, what is common is transactions, what we call in Hindi as len den, and the ultimate result of all these transactions being profit or loss. So the talent or the skill of the management of a business is to ensure that the profits are maximized for the accounting period, or if the losses are inevitable, then minimize the losses. For example, it is not very easy to wake up one fine morning and say I will do a business and reap only profits. In the first year or in the first few years, what we call the gestation period, a business might result in losses. So their losses are inevitable. Imagine a company which is engaged in infrastructure business. It takes a long time to start making profits. The gestation period is long. So there the losses are inevitable. Then the skill or the talent of the management is to minimize the losses. So the ultimate objective of a business, whether you are set up for a commercial profit-making purpose or otherwise, is profit maximization or loss minimization. This is the ultimate financial goal or financial objective of a business. So ultimately we know that there are various forms of business and the various types of business they could engage in. What is common? Business transactions. So we need to understand what is a transaction next. If it is a manufacturing business, for example, you convert input into output. We purchase raw materials, process this, convert them into finished goods, sell the finished goods for a price. So there is purchase of raw material, processing going on, and this processing results in finished products, finished goods, which are sold, and a profit is made. That is the activity in a manufacturing business.